All the economies across the world these days are getting very environmental conscious. We are talking about carbon utilization, we are talking about buying and selling carbon credits, recycling of materials, zero waste. So all these concepts are getting more and more importance across the globe. So developing a circular economy, there's one company which is actively participating in it. It's a small or micro cap company which is not much discussed, and we are going to do the analysis of Tinna Rubber and Infra today in this video. So if you're new to the channel, please do subscribe and hit the bell icon. And if you are not a part of our Telegram channel, you can join as we discuss daily market views and a lot of interesting news on our Telegram channel as well. So let's get started. So Tinna Rubber is a 4 to 5 decade old company in recycling of rubber materials, especially the tires, and they recycle these tires to make value-added products which are used by other industries as raw materials. So this was started by Mr. Bhupender Kumar Sekhri in 1977. And this company converts waste tires into value-added products. In terms of integration, they are the largest in India, as right from the picking up of the tires till the end product manufacturing, everything is vertically integrated in the company in-house. And they have multiple plant locations across the country, and this is the only company which has a widespread multi-location plants in India. So in terms of recovery of waste, the company goes to the extent of almost 99.5% recovery. So almost the entire waste material is converted into value added products. And in the product called Crumb Rubber Modifier, CRM, this is used in the construction of roads. This company has been the pioneer. They started the first manufacturing of this product in India. Specifically talking about mesh micronized rubber, which is 8 to 140 specifications. This company is the largest in India and one of the top few in the world. In terms of volume of tires recycled by the company, from the financial year 2018 to FY21, they have done in the range of about 26,000 to 35,000 metric tons, and in FY22 this went up to almost 48,000 metric tons. So there's a sharp jump, and this momentum is continuing in Q1 FY23. As you see, the number is close to about 15,000 metric tons. In terms of the products which can be manufactured from the recycled rubber or the recycled tires, you can see there are a lot of products which we use in the daily life which get manufactured from this. It's not just the tires which get manufactured, like products like the medical dropper, conveyor belts, the roads, the gym tiles which we use on a day-to-day basis in the gyms these days, the rubber mats which we use for yoga, then the sports turfs which are also used very rapidly these days. So all these interesting products can be made from recycled tires. So this industry is having good innovation to manufacture new products from recycled rubbers. Let's look at the history of this company. It has a very long history. You'll see a lot of new businesses which this company has started in the past, which eventually got demerged from the company, and now they are focusing on recycling of tires itself. So they were started in 1977 by Mr. Bhupender Kumar Sekhri, and they started with a technology from Japan to manufacture footwear soiling sheet in 1980. In 1982, they started manufacturing of lightweight rubber slippers, and they became one of the leading footwear rubber manufacturers in India. In 1987, they commissioned the leather footwear manufacturing unit, and in 1990, they diversified into the food segment, into the edible oils and agro commodities. In 1994, they diversified further into the export of these commodities and became one of the largest in India in terms of exporters. And in 1995, they set up a bulk cargo terminal in Visakhapatnam port. Now in 2010, they started focusing more on the recycling of rubber business and became the largest processor of CRMB, the rubberized asphalt, which is used in the laying of roads in India. And in 2012, they became the largest producer of tire crumb in India. So the tire crumb is used to make the off-road products. Now we'll talk about the products in detail in the coming slides. In 2014, they commercialized the reclaim rubber plants in Himachal Pradesh and the crumb rubber production in Tamil Nadu. So they started doing geographical expansion and capex in the 21st century. In 2017, they started exporting their products. In 2020, they had a key tie-up with a world's leading tire manufacturing company called Bridgestone. And with this tie-up, they started taking the waste tires which Bridgestone accumulated. In 2021, they expanded their further capacities of MRP and reclaim rubber. So this was a journey of the company, and there were interesting diversified products lines started by the company, as well as they ventured into the export markets and expanded their geographical presence in India by doing a lot of capex. So let's talk about the management of the company. Mr. Bhupender Kumar Sekhri, he started this business about 50 years ago. He is the chairman and managing director of the company. He has gained this knowledge of these technologies from several tie-ups with companies in Japan and Italy in the past. and he has been the main driving force behind the growth of the company in the last few decades. Now moving to the business model of the company. The product which this company uses as a raw material is the waste tires, which is more popularly known as end of life tires, which are ELTs. So taking ELTs as raw material, broadly they manufacture products in two segments. The first segment is related to the steel products, the second segment is related to the rubber products. Now why is steel coming into picture? As you know, in manufacturing of tires they also use bead wires. So the bead wires are made of steel, and that's why when you are recycling tires, the steel also comes out as a waste product or a material which can further be made into different usable materials. So from steel they manufacture steel abrasives as well as the scrap, which is eventually used by steel manufacturing companies. They manufacture various specifications of materials which are used in laying of roads, which is crumb rubber modifier, and they also manufacture reclaimed rubber, which is used to manufacture several off-road products like tires, mats, conveyor belts. So broadly this is the business model of the company. Now it's important to note that this is an eco-friendly company and working in a circular economy. As you know, from the products which they pick up, the waste tires, almost 99.5% material which they make becomes again usable. So it's very important to note that this company is creating or helping in creating a circular economy. Now coming to the different product segments, broadly we are dividing the product segments into the road products and the off-road products. Among the road products, all the materials which the company manufactures which help in the laying of roads will be covered. So the first product we are going to talk about is the crumb rubber modifier, which is CRM. So this is made of waste tire rubber combined with hydrocarbons and other mixtures. The roads which are made by these materials are more stronger and more durable than the traditional roads. And in this field, Tinna has almost 60% of the dominant market share in India. The next product in the roads category is the bitumen emulsion. In this, the company has a good brand called Tinna Bitumen Emulsion, which is very popular, and this is well accepted by different companies which are into the business of laying roads. In the bitumen field, there are two processes, which is cold mix technologies and the hot mix technologies. The cold mix technology is more popular and promoted by the government, and Tinna also manufactures emulsion which is used in the cold mix technologies. So the road sector products which the company manufactures, this volume in these products has gone up from about 7 to 8,000 metric tons in the last 3-4 years up to almost 24,800 metric tons in FY22, and this momentum you see continuing in Q1 FY23 with about 6,500 metric tons of processing. Now what is the advantage of laying roads with the products which the company manufactures called bitumen or the asphalt roads? As this bitumen which is used to lay roads, this product itself is 100% cyclical. The bitumen which is used to lay roads itself is 100% recyclable. So again, there is no waste if you are using bitumen to construct roads. They give stronger, and the roads are, the vehicles don't skid on the road. They are more economical, stronger, durable. So all these advantages help the company to get more business and the government to promote roads which are constructed using these materials. Now coming to the non-road sector, where the company manufactures products which are used in different materials like the conveyor belts, tires, and various other products which we have seen in the first slide, like the yoga mats and gym flooring. So under the non-road category, the company manufactures high tensile ultrafine reclaimed rubber. So these are various specified products which are manufactured by the company. Now they also manufacture crumb rubber less than 80 mesh. So these are specific materials which are used to manufacture different off-road products. The third product which the company manufactures is micronized rubber powder. So for this, the company is among the largest producers in the world. And the fourth product which the company manufactures is coated rubber crumb. So all these off-road products which we have spoken about, without going too much into the technical details, are used to manufacture products like tires, conveyor belts, footwear, rubber molded goods, rubber mats, sports stuffs. So all these are manufactured. Now coming to the volumes of the non-road business or the off-road business, earlier they were ranging between about 18,000 to 25,000 metric tons, which shot up to almost 40,000 metric tons in FY22. And now in Q1 FY23 also they have done about 12,700 metric tons. So they will eventually cross the FY22 volume in this year also. The third category in the off-road is the steel products, because the tires which they use for recycle also involve the bead wire. So from that they manufacture steel abrasives, and along with the steel abrasives they also manufacture some other products like steel shots and the steel scrap with the leftover material, which is eventually used by the steel manufacturing companies. In terms of volume, the steel products manufacturing is almost range bound somewhere around 8,000 to 12,000 metric tons per annum. Now, there was an interesting study done by the Swedish company where they found out that compared to the traditional roads which were laid using the conventional asphalt, if they use the modified bitumen which these companies manufacture along with the earlier, they mix the new material along with the old material, or they make this roads with the completely new material which is a modified asphalt or modified bitumen, the roads are much cheaper and the roads have longer life. So in these examples, you see the green color ones are the new materials which are used. So with the new materials which is AR2 and AR3, which is fully new material or majority of the new material which is used, the life of the roads is almost 8.3 years, which is higher than the conventional asphalt roads which are laid. So by these kind of studies, what happens that the companies get more aware or the governments get more aware and they promote usage of these materials across the globe. So the demand for this product increases, which generates tailwinds for companies like Tinna Rubber. In terms of presence, they have a wide geographical presence in India, in North India, Eastern India, as well as the Western India, Southern India. They have 3 plants which are strategically located at the ports because they involve import of waste rubbers, tires from other countries as well, and exports to other countries. So these kind of locations give this company a lot of advantage and savings in terms of cost. And this is the only company in India, the largest company, which has multi-location plants. Other companies are region specific, but this is the only company which has multi-location plants. So if they have a customer which has manufacturing facilities in different geographies in India, this company is able to cater to such customers and also provide the same quality of product to all the locations of the customers. Sometimes these products are not feasible to transport from one place to another because the cost of transport also gets added to the products. So as a multi-location company, that kind of advantage is there to this company, or competitive edge is there compared to the smaller players. When you talk about their clients, you see all the big brands are working with them and they are suppliers to brands like Indian Oil, Seat, Balkrishna Industries, Apollo, Pix in conveyor belts, then ONGC, MRF. So all these big brands, national and international brands, are working with Tinna Rubber. In terms of their segment wise revenue, earlier they had about 6.7% from the exports and now it has gone up to 7.5%, and eventually this will further go up as they are getting new partnerships or tie-ups with international tire manufacturing companies, and they are already in talks and will soon conclude and announce such tie-ups. In terms of their segment wise revenue, the non-road and road related products, the road related products constitute about 36.7%, almost 37% of their revenue, and the non-road product constitute about 63% of their revenue in FY22. Now let's talk about in brief about the industry in which this company is working. The road sector, there is aggressive road construction being going on in the country. As you hear our Minister, Mr. Nitin Gadkari, often talking about increasing the construction of roads and the speed at which the roads are getting constructed. So all this will generate tailwinds for this industry. And there's a policy called CRMB policy, which if made mandatory, all the companies which are laying roads will be mandatorily required to use the products which Tinna Rubber manufactures, not specifically Tinna Rubber, but the CRMB products which this company manufactures, and that will form a part of the raw material for laying roads mandatorily. So the amount of requirement of these products which will shoot up, and if that gets implemented, there will be a huge demand of these products, and that is a big tailwind for this company in the future, which we can anticipate. The CRM market size is about 27,500 metric tons, and for laying 1 kilometer of road, the CRMB requirement is about 25 metric tons. So for 1 kilometer itself is 25 metric tons. So you can imagine the quantity of material required for laying of thousands and lakhs of kilometers of roads across the country. So taking this, we can calculate the annual market size of CRMB to be somewhere around 2.7 lakh metric tons. So it's a huge size of the industry. And from this present 2.75 lakh metric ton, it can go up to almost 7 lakh metric ton in the coming years. For the modified bitumen which this company manufactures, the present market size is about 1,50,000 to 2 lakh metric tons, and the modified bitumen is almost only 3 to 4% of the entire bitumen market size. And the bitumen market size in India is expected to grow to 7 million metric tons. So almost 3 to 4% of this will become again modified bitumen market size. And the size of bitumen emulsion is about 4 lakh metric tons. As you see around these days, there are a lot of floor mats or turf grounds which are being constructed. So the crumb rubber industry is growing pretty well, and on an average yearly nowadays about 50,000 metric tons of crumb rubber is consumed in India. When you talk about the reclaimed rubber industry as a whole, India is the second largest in the world, and this industry is expected to grow at a range of about 12% every year from here onwards. The global conveyor belt industry is expected to grow at a CAGR of about 3% every year. So this is in brief about the various industries in which this company operates or the end customers of these companies operate. Now let's talk about the competitive edge or the economic moat of this company. The company has well diversified product mix, as some of their competitors are only working on the on-road or off-road products, but this company is working in both the categories. So they have a well diversified product mix and they keep innovating and manufacturing products of different specifications which can be used by different end user industries. They generate almost 99.5% of usable material, so they are almost zero waste business model, which is very good for the economy. The management has experience of more than 5 decades and they are pioneers in some of their products like the CRM. In manufacturing of micronized rubber powder, they are the only ones in India and one of the largest in the world also. And as per their client specifications, the company is able to customize and offer different products of different specifications. Another important thing to note is for them to supply these materials to any tire manufacturing company, it's not very easy that they contact them and they start supplying them so easily. It takes about 3 to 4 years for that process and for the tire manufacturing company to approve them as a vendor. So it is not so easy to penetrate this market, which this company has already done with the Indian companies, and they are able to get some approvals from the foreign tire manufacturers very soon. They keep doing R&D and develop new value added products. And as we have discussed earlier, it is the only Indian company which has multi-locations plants which are widespread across India, which gives them a lot of locational advantage of scale, margins and operational efficiencies. And in terms of integration, right from picking up of the tires till the delivery of the end products in different on-road and off-road categories, this company's manufacturing process is fully integrated. In terms of growth outlook, the company aims at a growth of about 25% compared to FY22 in FY23, and there onwards the company is expecting and giving a guidance of somewhere around 15% growth annually. Recently, the company has commercialized their 4th devulcanizer reclaim plant in Chennai, and their exports have doubled from around 1100 tons to about 2200 tons in FY22, and you can expect these exports to further grow as they get approvals from other foreign tire manufacturing companies. Out of the 50,000 metric tons of modified bitumen which they already have orders, only 11,000 tons is delivered in Q1. So the remaining 40,000 tons of revenue will fall in place in FY23 in the remaining 3 quarters. In terms of EBITDA margins, the company is guiding that they would do an EBITDA margin of somewhere around 16%, which is very good compared to the earlier years which the company has done. And for FY23, you can expect a quarterly run rate of revenue of about 80 to 85 crores from the company, as they have discussed this in the Q1 FY23 earnings call. Going further, how you can see this company grows, they will have geographical expansion in India as well as abroad with different companies, and they will also do some more innovation and manufacture various value added products and do some upscaling and backward integration also. So these kind of hints were given by the company in the Q1 FY23 earnings call in terms of their growth prospects. Now, what are the risks which this industry faces? As this industry is not very simple to understand and these kind of companies are not very easy to invest, as entry and exit on these kind of companies is also very important. These products, if there are some substitutes or new technologies coming for these products, there could be a risk of lesser usage of these products in the future. The demand for these products are linked to the prices of the new rubber. If the new rubber prices are going up, then people start mixing the recycled rubber more and they are ready to buy the recycled rubber, which increases the demand of these products. And if the rubber products prices are falling, the demand for these products also fall and the selling price of these products also falls, which impacts the top line as well as the bottom line, as the margins of these companies reduce in such cases. There is competition from both listed and unlisted players, although there cannot be an identical competitor in all the segments, but segment wise if you see, there will be competition faced by this company. Whatever favorable government policies which we are talking about, if those policies are not implemented or after implementation in future those policies are changed, then that can impact drastically the business of the company. In case of economic slowdown, the business might be impacted. A very important thing to note that this is a kind of cyclical industry, so you have to be very careful while investing in such companies. Another thing to note is that the company is not getting sufficient raw material in India itself, so they are importing the waste rubber tires from various countries of the world. So the availability of raw material, the transport cost, the cost of raw material will also be challenging sometimes due to the geopolitical issues for this company. Now, after understanding the business model, the competitive edge, risk and everything about the business of the company, let's talk about the financials part. Starting with the revenue, in the last 5 years, the company has done a range bound revenue of about 100 to 130 crores in the FY 18 to 21, but they have done excellently 237 crores in FY 22. FY 23 at least looks good, but from there we have to see whether these kind of revenues are sustainable or not. In terms of EBITDA, they have done a EBITDA of about 37 crores, which is much higher than the earlier years, and the EBITDA margin has gone up to almost 16% in FY 22, and FY 23 also the company is giving the same guidance. In terms of profits, the company was often a loss-making company in the last few years. So because of the cyclicality nature of the business, the company sometimes also incurs losses as well. But in FY 23, they did a good profit of about 17 crores. The profit margin at the net level is somewhere around 7% presently. The share capital is constant at somewhere around 9 crores. The reserves are almost stagnant as the company has done losses in the last few years. The borrowings are down, the debt equity ratio is in control, it is less than 1, but still 0.92 also I somehow can consider it on the higher side, and it will impact the profitability because of the interest cost. The trade payables are somewhere around 15 crores, which are not more. The fixed assets are somewhere around 70 to 80 crores. So they have not done huge capex any time recently. The inventory levels are somewhere around 30 crores and the inventory days is somewhere around 107. So this is also slightly on the higher side. Inventory days of somewhere around 3 to 4 months is slightly on the higher side. The trade receivables are somewhere around 32 to 33 crores and the debtor days are around 51. So about 2 months debtor days is fairly understandable. The company doesn't have much cash on the balance sheet as the company has a lot of debt. The operating cash flows have always been positive. So in terms of cash flows, the company is doing well, and the free cash flows have also been good for the company. In terms of ROC, in the last few years, the company was not doing so well, but in FY 22, it went up to almost 23%. Going further, we have to see whether this is sustainable or not, as the company is doing capex and coming up with a new manufacturing facility. Now let's talk about the shareholding of the company. The promoters hold almost 74% of the company, which is very good. Public holds about 25%. FIIs, DIIs don't have substantial holding in the company. One of the ace investors, Dolly Khanna, holds about 1.83% in the company, and there's no pledge. In terms of valuations, one of the listed players is GRP Limited, but please note that GRP Limited is only in non-road products. They are not into the road products. So comparing with them, GRP Limited has about revenue of about 400 crores, EBITDA 6%, ROC 6%. So it's a low margin, low ROC business, trading at a PE of 31 and market cap to sales of about 0.6. So compared to Tinna Rubber, the financials of GRP don't look so attractive, and the valuations of Tinna Rubber, looking at the present facts and figures and the performance of the company, look fully priced. Another important thing to note is the business of the company could be cyclical, so you can't assume the valuations to be the same, as these are the best times for the company. So if the things go worse and the things get adverse, the margins and top line will get impacted and the valuations will immediately go for a toss, and you will see higher P multiples and higher market cap to sales immediately. So when you are investing in such companies, either you have to buy those companies at substantially lower levels where your margin of safety is very high, or you have to accumulate these stocks in a staggered way, and whenever you sense a reversing of the cycle, whenever you sense the falling in rubber prices, whenever you sense the change in any government policy or any adverse impact on the industry, you have to immediately exit, as if you are getting stuck, then you will be stuck in a consolidation range for years and years together in such kind of stocks. The auditors of the company are Mr. V.R. Bansal and Associates. Presently the company is doing a ROE about 23%. The dividend yield is about 0.64%, which is not much high, but at least it's a dividend paying company. Another thing to note that the company has a lot of related party transactions, although they are not alarming, but still before you invest in the company, it's always better to get some clarifications from the management by writing to the investor relations team. When you look at the chart, you see that the chart of the company has not done well in the last few years. It was completely a sideways chart, but suddenly it gave a sharp move and went up to almost 700, and even now it is trading almost at the higher levels. So buying at these levels where the chart is very much stretched is not in favor of any investor. The risk reward is not in our favor. So you have to wait for a sharp retracement in the stock and then start accumulating at the lower levels, and that too in a very staggered manner with a time frame of 2 to 3 years if at all you want to invest in the company. So this is about Tinna Rubber. I hope you like the analysis when what we talk about the business as well as the financials of the company. So to summarize, these are the thesis points. This company has a lot of sector tailwinds which help in the growth of the business right now. It's an R&D focused company developing new products, value-added products for its customers. Financials are decent. In terms of scale, the company is one of the largest in India and they are fully backward and forward integrated. The company has given good growth outlook of about 15% every year. and the government policies are also in favor of these kind of companies these days. In terms of antithesis points, if there are any geopolitical issues or global macro factors that can impact the supply of raw material, they can impact the margins and sales of the company will have competition from both listed and unlisted players, and if the government policies become adverse now or in the future, it will drastically impact the business of the company, and it's a cyclical business, so you have to keep that in mind before you invest in this company. So this is about Tinna Rubber. I hope you like the analysis. If you like it, hit the like button and subscribe to our channel, and if you're not a part of the Telegram channel, please do join by searching my name on the Telegram. You want me to make videos on your favorite companies? Don't forget to comment the name of those companies below. Thank you for watching and have a wonderful day.